All right, good evening. We're going to go ahead and get started. We're not expecting a huge crowd tonight. We're just going to go ahead and get started with this. This is going to be a pretty exciting time. And tonight we're going to be discussing and recording this for YouTube. We do put this on YouTube after we're done, so I'm certainly thankful for the opportunity. Now, I know there's not a big crowd, but tonight we're going to be talking about first-time home buyers mastering the move. But the way we're going to be talking about it is actually not entirely about mortgages tonight. We're actually going to be talking not even really a whole lot about interest rates or about paperwork. We're actually going to be talking about possibilities. You see, every family you're going to hear about tonight actually started in a very different place. Yeah, started in a very different place. And that place was, for some people, it was a very difficult place, but it certainly was the place where people needed to set some time aside to be able to get set up to go into different places. Some had credit challenges, some of them had savings challenges, some of them had confidence challenges. But what they all had in common when they won was a plan. You see, because most people just start with hope, but hope without a plan is really just a wish. And so we're going to be going into tonight, and we're going to be talking about all sorts of great things. In fact, our discussion tonight is really going to be about how to get ready, steps to buy a home, and we're going to talk about the market and what's happening in the market as well. But we're going to do it with talking about case studies, really about people and how they set themselves up for success in order to be able to pull this off. For example, one of the big ones when we're talking about getting ready is going to be JT. JT was in his mid 20s. He was living at home with his family. He wasn't making a fortune. He didn't have a giant savings plan. He was a teacher. He was a teacher. He was also a coach at one of the local high schools. And he wasn't sure that homeownership was even remotely realistic for him. He called me on a November afternoon and we had a discussion and we started talking about what's happening in the market and started talking about other things that were going on. And like many first time home buyers, he thought he needed to have it all figured out, completely figured out before he started. But what he really needed more than actually having it all figured out before he started was he really just needed clarity. He needed to understand where he was with his budget, spending plan, understanding how he was going to be able to move out of his parents' house and into his own. He needed to understand his credit. He needed to understand how his debt affected his cash flow, which is the biggest piece. And that's one of the big pieces we're going to be talking about tonight is cash flow and how cash flow makes a huge difference in how you're going to be able to buy this house. We talked about his timeline and then we talked about support systems because here's what we really find. Most people don't need more education. They don't necessarily need more motivation. What they really need when it comes to this is they need a roadmap. And so, like JT tonight, we were able to help him get moved into a house. It didn't take terribly long to get him moved in. In fact, the great thing about the way he was set up, because he was a teacher, is he had access to a couple grants that we were able to help him get set up for. And the roadmap fell right into place to where he literally, from the first conversation till he moved into this house, was 45 days. It's very important to know how to arrive at the roadmap. And so many people really, they're just renting. They just don't get it. And I get it too. I've been there. And actually, Roy, one of my clients, he spent years believing that he couldn't do it. He spent years not understanding what he could do to be able to buy this home. He had such a tough time trying to figure it out because he kept on making payments to rent, not understanding what it was that what he was doing. And here's the problem with that is let's kind of put this in perspective. I'm going to pull out a calculator real quick. If you're paying $2,500 in rent and you do that 1 year, you spent $30,000 in rent and you have nothing to show for it. Every year, Roy kept on doing this over and over and over and over again. And what ended up happening with Roy is that, in essence, his rent kept on going up and he still had zero to show for it. He delayed building his equity. If he would have bought when he was at a certain age, he could have started building equity and working off of that. One day he realized it just wasn't time to do it anymore. So you know what he did? He picked up a call and gave me a call and realized that he needed to start understanding how to get this set up. He needed, once again, not just a hope, he needed a roadmap. And so what we started doing is we started creating different points. We started talking about how rent was paid. We started talking about how to get ahead of the principal reduction, how to accumulate wealth. But you can't start accumulating wealth if you're spending $30,000 a year in something that gives you zero return. And that's where he was at. He was creating that zero return. So we started talking about if you wait 5 years, who really benefits from the appreciation? 5 years ago, if you'd have bought 5 years ago, you'd have $200,000 in equity right now in most cases, or at least 100. So who benefits? The landlord or you? So we had to pause. We had to kind of get into it. So it was a big deal to figure out for Roy what we needed to do to get him set up to buy a home. Now, Roy was he was kind of a combination of mindset. I can't do this. I've never had somebody in my family who's been able to do this for a while, to I'm self-employed. I'm not sure if I can actually make it work. We had to go through the process of understanding how the roadmap worked for him so that we could set him up for success. And that's a big deal because the wealth test in 5 years makes a lot of sense if you can use a part of that 30,000 that you're seeing that goes into your rent to create equity. 5 years ago, if he'd have bought 5 years ago, he would have had $100,000 in equity that would have definitely contributed towards his wealth building. Now, steps to buying a home really start fairly simply. And Juan was the same way. Juan was a guy that came to me and he was trying to find out as much as he could find out about how he could buy a home. And what he learned about it was is that he needed to get pre-approved. He thought he should go start looking at homes first, but what he ended up finding out was is he really just needed to get pre-approved because pre-approval is really about reducing risk. It's about understanding what it is that you can mathematically afford. And I have a little worksheet that I'll be able to send out later to help you kind of establish what that looks like for yourself, if that's what you want to do. Certainly happy to do that. But he learned that pre-approval is really about reducing risk. It helps you to be 100% prepared, and there's fewer surprises in the process if you go down the path of making sure that you're fully pre-approved. This is where we go into our 5 steps to win. This is where we discuss all sorts of great tactics to help you win. We look at credit, we look at income, we look at assets, we look at how family can possibly help out. Maybe there's some strategic placements that we need to help you with. Maybe it's about managing risk, and maybe it's encouraging to help you find how this works. But the 5 steps to win that we put all of our clients through are really guardrails. They're guardrails designed to provide you with safety and to prepare you so that we can reduce the risk, we can reduce the timeline, we can reduce the heartbreak, because in essence, we're doing all the hard work up front and we're making sure that you have exactly what you need in order to win. Now, this is where we really do get into how this gets set up and we set you up for success, because each of the steps that you take in the pre-approval build off of each other. And what we do with it is it helps you avoid making financial mistakes, because when we're sitting together and we're trying to help you with this pre-approval, we're going to look at your credit, we're going to look at your income, we're going to look at your assets. But even more than that, what we're trying to do is create an efficient situation so that you can understand the cash flow in your life. Because let's just kind of put the numbers into, let's put them into some form of an understanding. If you're making, let's use round number of 100,000, you're not taking $100,000 home. You've got to pay taxes. You've got to pay for health insurance. You've got to pay for retirement. You've got to pay for, there's all sorts of things that are coming out of your check to where if you're making 100,000, you're really taking home about 65. Now, when we set up for this pre-approval, we're going to make sure that we're looking at each one of these pieces to make sure that it creates a cash flow plan that works for you. because a really good plan really does help create some confidence in the process. And if we can help create confidence in this process, it's really going to make you feel so much better about what you're doing and what you're accomplishing. And let's talk about this from a cash flow perspective. When you're getting ready to buy your first home, it's not likely that you're going to live in this home forever. So if you can strategically enter into this home, understanding how this cash flow process works for you, it'll help you streamline and springboard so that you can get ready to either buy into the next home, or you can convert the current home into a rental, use the cash flow from that to help build wealth, and then also help you move into the approval of buying the next home. And it can start from all sorts of different places. So, for example, I'm going to just share a real quick credit story. We're going to talk about Jarrett. Jarrett, this case study is a little crazy. Jarrett was living in a shed. He was living in a shed behind a family member's home. He had student loans. He had credit card payments. He had late payments. His life just felt absolutely stuck. He was in a really bad spot. And most people would have seen his credit score, and I did see it. It was pretty rough. It was pretty bad. I saw a guy who needed more than just credit score help. He needed hope, but he also needed a plan. Now, what I did for him is I helped him. I put him on a plan. I didn't babysit him. I just told him, here's what you have to do. This is what you have to do to get there. Follow the plan. So he did. He followed the plan. It took him 2 full years. He created a budget. He did a spending plan that worked. He created all sorts of benefits for himself on how to make this happen. Fast forward to today, he took advantage of the advice that I gave him, because there's so much data out there that people don't understand that it's really hard to put it all together yourself, because there's 16 versions of FICO and Credit Karma, CreditWise, and some of those credit apps. Those are all promotional scores. Those don't give you what you need. We also have to look at the trending data. What's affecting your credit? That's what credit is all about. We're looking at this really, really, really seriously to make sure. Credit scores play a huge role in your qualification. And in the case of Jarrett, it played an even bigger role. We had to go through the plan of trying to help him get set up with credit. Some of it had to be, he had to set himself up with a secured credit card to get himself set up and unstuck from that. Now, he followed this plan. Fast forward, he bought his own home. He started a business, very successful business. He got married, and he's living independently. That's a huge transition from going to a shed to this. But he did it because he started doing the things that are not intuitive, that the financial institutions don't share with you, which is how to build your credit, how to manage your bills, how to create a spending plan, how to make sure that you're understanding what we're looking for when it comes to financial management, and then getting the math right so that we can get you set up for business. Now, having said that, I'm going to give you a counter story. We got a guy by the name of Vega. Vega didn't start out in a shed, but he did live pretty large. And he had some credit problems, some significant credit problems. When I first met him, he had all sorts of judgments. He had collections. And we did the same thing we did with Jarrett. We put together a plan. He followed the plan for 6 months. He checked in. He followed it for another 6 months. And then he checked in, and I was hit with a surprise. Because after a year of following it, he opened up a new credit card. And he maxed it out, and he bought a Disney cruise. The plan didn't fail. His commitment to the plan failed. Today, Jarrett owns a home while Vega is still talking about buying one. Many people don't necessarily need a better mortgage. They don't need a better education. They just need better habits. And so when we start talking about what FICO does, FICO is a representation of who you are. It's a representation of your ability and willingness to repay your loan. And so the FICO really does that. The trending data is the data that supports it. And it's a big deal. And if you haven't taken responsibility with that, it's really a big time to go ahead and do that. We want to make sure that you get set up. And that is a big part of what we talk about when we're starting to talk about credit and risk. And this plays a huge role in kind of who I am. So I'm going to share a little bit about me because some of the stories that you're hearing, I can completely relate to because I grew up watching my family struggle. Debt was normal, stress was normal. We quickly realized that financial institutions were not designed for people like us, and it was tough. Nobody ever taught us how it worked. And that experience has actually shaped my mission to make sure that when I'm sharing with you how to build your wealth through real estate, that we're doing this, understanding how your cash flow impacts it. Yes, I help people get into debt by buying a home, by getting mortgages. But if they can make wise decisions along the way with these, it can make a huge difference. You see, I grew up very blue collar, which is a great way of saying poor. And I spent a lot of time not understanding this stuff. And we had to dig ourselves out. And once we dug ourselves out, my parents created liquidity, all sorts of really good liquidity. They paid off a house. Then they went and they did it again. And then they bought more property and did it again. And then bought more property and did it again. And over the years, I saw it naturally transform into a cash flow machine to where now my parents live independently because of the cash flow that they have. And naturally, that has helped me because I went through some of the same mistakes myself. I went through some of the same mistakes myself, and I naturally had to shape myself into understanding this situation. And so now, as I talk to people and help them get set up for buying a home, I like to put them through what I call the three highs, which is high clarity, high transparency, making sure that you know what you're getting into, high confidence, high trust, and high care. High touch. I want to make sure you know what you're getting into because you deserve to have the experience that I didn't have growing up, which is making sure that you're making good decisions for yourself and accentuating your cash flow because every family depends and deserves clarity. Now, let's talk about income real quick because income plays an emotional toll on everybody. And I'm going to go back to Roy for a minute. Roy was self-employed. He thought that that meant that homeownership wasn't available. He was self-employed, but he was a pastor. And literally, he was so generous with his time. He was a big community mover and shaker, and he gave generously to the community, not only of his time, but also of his money and his resources. But he had the income. He just didn't know how to use it. And he thought that he had to be consistently generous with everything he did, and that home ownership was somehow for somebody else, not for him. Now, the challenge with any self-employed person is really documenting the income properly. It's really getting you set up for understanding it because the different types of income play a huge role in what you're doing. You know, there's a continuum that we look at when it comes to income. The more predictable, the easier it is to qualify. The less predictable, the harder it is to qualify. Well, Roy was self-employed. That's the most difficult way of getting pre-approved. And so we had to come through a plan. It took Roy a year and a half, almost 2 years to get set up. I had to show him what to do on his taxes. I had to show him what to do on his income. I had to make sure that he documented things the correct way, that he put things on his taxes the right way. Sometimes the obstacle isn't what you earned, it's how you report it so that we can understand lenders and know how lenders look at it and how they view it. Just because it's complicated doesn't mean it's impossible. You can have a variety of different types of work. The more variable it is, the more time we have to look at it. If you're 100% commission or you're self-employed or you're bonus or piecework, those are highly unpredictable compared to hourly, compared to salary. If you're getting bonuses or if you're working for a staffing company or you're working for Uber, each one of those works as long as we have the appropriate levels of time with each one of them. Some of them are 24 months. Some of them I can get by with 12 months. There's all sorts of things that you can do with this. Now, in the case of Roy, he just needed to understand how lenders looked at it. And we had to go ahead and put together the plan so that he could set himself up for success. It took a little bit of time, but it was something that could be done. Now, Roy could have gotten a cosigner as well. I actually co-signed for my son. There are risks, there are rewards with it. If my son hadn't made the payments, and it would have been on me. And those are big deals. That's a big deal in order to be able to make that work. But I do have to say that co-signing could have helped him, but in his case, he didn't have a co-signer. So he had to do it on his own and he had to find a path. But complicated does not mean impossible. It doesn't have to be perfect for it to be a smart decision. Now, I'm going to share another story here real quick with a lady by the name of Vicky. And she had a problem with the cheddar. She had a problem with savings. She needed some savings. She needed to be able to have enough cash to be able to put money down on the house. Now, Vicky wanted to stop renting. She had worked really hard. She had saved a lot of money, but it just wasn't enough. She just couldn't pull it all together. She was still a little short. Her father had passed away. Her mother wanted to help, but she simply couldn't. Mom couldn't help her. In fact, mom was going to eventually move in with Vicky. So what happened? Vicky actually made a couple phone calls. Her father had passed away, so she couldn't call her dad for help. Her mom didn't have the help, but she had an uncle. She called her uncle. Her uncle decided to give her a little bit of money. It wasn't a lot. It was a couple $1,000s, just a little bit. And then she got really bold and called her other uncle. And they both, by that point in time, put $2,000 in together. Now they were sitting at $4,000. Now the savings was starting to grow. She didn't have a 401k. You can pull from a 401k, by the way. She didn't have stocks. She could have pulled from stocks if she had them. She could have if she had crypto, but that's not very common. In her case, she just needed a little bit of help. Now, we have to document how these happen with gifts and other things like that, but you can crowdsource, you can get it from family. You just have to plan it well enough in advance so that we know how it works out and we can make sure that we verify that the money came from an acceptable source. Acceptable sources do not include selling pharmaceuticals on the corner. So that's not a source. But having said that, if you're getting a gift or if you're pulling from crypto or stocks or 401ks, those are all places that you can pull it from. So Vicky made a few phone calls. She called a couple uncles. She called one of her aunts. Nobody changed their lifestyle for her. Nobody wrote a big check for her. But together, those gifts created enough of a springboard so that she could actually get into a house. She did not have any wealthy family. All she had to have was the courage to ask. So, a question that you need to be looking at is who's on your team? You can have it too. You can get a gift from grandma. $500 goes a long ways. $1,000 goes a long ways. You can pull from a 401k. That's very common. We see 401ks all the time. These are places that are very important to be able to understand what the options are that you can get. A 401k loan works great. You can do a distribution as well. All of these work with you. You can pull from grants. Many first-time home buyers do have grants available to them, whether it's through Virginia Housing, whether it's through the seasonal grants that come one time a year. JT, for example, he got a combination of 2 Virginia Housing grants, one of which was designed for public servants and teachers. He got that one and was able to piggyback it. Yeah, he got $17,000 in grants because he piggybacked a couple different grants. It does work. He tied into the assistance programs. Now, there are a variety of loans out there. And these are the most common loan types that are out there. There are 2 main loan types. There are government loans, and then there are conventional loans. Now, this is as boring as it gets talking about the loans, but here's what you need to know. Jarrett needed flexibility, didn't have great credit. He needed a government loan. He actually got a fantastic government loan and was able to get some help, and he was able to get into the house. That's an FHA loan. He was able to get in, and they're fantastic loans to help you get started. Now, long term, you want to get into conventional, but short term, he needed flexibility. I have another client by the name of Davey. Davey, he was a veteran. Guess what he can do? Guess what you can do with these government loans? You can actually house hack with these. You can house hack with FHA and VA. Yeah. You can buy duplexes, you can buy triplexes, you can buy a quad up to 4 units. And you can do it with an FHA loan or you can do it with a veterans loan, VA loan. And if you're looking at this as your first investment home, that's a fantastic way to start your portfolio. Because here's what happens. In the case of Davey, he used his VA benefits to buy a duplex and he lived in one half, rented out the other half, and that other half pretty much paid for his mortgage. Whole thing. Fantastic. You can do the same thing with FHA. Now, conventional, those are for people who have stronger credit profiles and that, a little bit larger down payments. But every family has the need for a different tool. These are all places where people, in essence, have to go into different types of loans to get them get set up. The USDA loan is really designed for like rural properties. If you want to live a little further out, maybe get a little bit of acreage, those are all out there. The bond loans, those are the ones that come with the grants because those are funded through either the state or through the federal means. Now, those are fantastic loans. All of them work. The government ones are going to give you a little bit more flexibility. The conventional ones are going to be the ones with better terms, but you're also going to have to invest a little bit more along the way. Now, we're right here at the midpoint. So, man, we're about 27, 28, 29 minutes in. It feels like a lot. It probably is a lot. But this is why strategy certainly does beat guessing. This is a great place for us to check in. Any questions so far on what we've talked about? We got a small crowd, so this can be very conversational if you'd like to. Anybody have anything to ask? All right, great. So now we're going to go on into the next step here real quick. I must be doing a tremendous job, so thank you for humoring me with that. But now we're going to talk about the steps to buy a home. Um, the steps to buy the home are not terribly difficult. But what we have found out is that if you don't follow the 5 steps to win, you can get set up for disappointment. We've had multiple buyers decide that they didn't want to go through the 5 steps to win, and they fell in love with a home, and they really only did 2 of the steps. And that wasn't sufficient really to even understand where they were going. Sometimes it can be because they don't understand the cash flow. They just think they understand the cash flow. And that's something that's really hard to fix once you've moved into the house. It can cost you years of regret doing it that way. In fact, I'll tell you a story. This one actually wasn't me. This was somebody called me a couple weeks back asking me if I could help fix a situation where a buyer went in and talked to some other loan entity, and I don't know names or anything like that. Even if I did, I wouldn't share it. But those folks went in and they helped pre-approve this lady, and they pre-approved her for a max. They didn't talk about cash flow. They didn't talk about how to get themselves set up into knowing what best to buy. And she fell in love with the house, and it was at the top of her price range. And when she went and started signing off on the loan, she got to the point to where she started to realize that, oof, if she ever had 2 flat tires in a row and had to replace the wheels on a car, she was going to be in trouble. And sadly, that's kind of what happened because after she bought the home, she lost her job. And the new job that she found was the same line of work, but it was for less money. And so now all of a sudden she's sitting in a place where she's struggling to make the payments. You really need to fall in love with your future. Don't fall in love with the house. Fall in love with your future. Understand that if you don't set yourself up correctly and you don't go through the path of understanding how to best get yourself set up for cash flow and get set up to win, you're going to be in a lot of trouble. That's why we go through the 5 steps to win. Because in step 3 of the 5 steps to win, we go through a really long consultation where we're helping people understand cash flow and helping people understand what's happening in the market so that they're not blindsided later. We don't ever want that experience to happen to any of our clients. Now, when you get into buying a home, there are some very specific things that you need to do. First of all, location plays an immense part of this, and you have to look at this as not only a short-term, but a long-term strategic call. Yes, you need to, even though you may not necessarily need schools, you need to be considering schools in your purchase. You need to be looking for the amenities, for the groceries, for the medicals. For some of the negotiables, you need to make sure that you know what your negotiable items are and your non-negotiable items. I had a lady come into me and tell me that she needed a 4-bedroom, 3.5 bath with a 2-car garage and a half acre in back and a quarter acre in front. That's pretty rigid. And when she came to me with the price of how much she was willing to pay, it was impossible, at least impossible anywhere in the Richmond metropolitan area. So understanding what your negotiables are is going to be very important. Now, this is where you have to consider whether you're going to be working by yourself or if you're going to be working with a realtor. There are services to help you with doing it by yourself if that's something that you want to do. Working with a realtor is a good way to go as well. Just keep in mind that you are responsible for the realtor's commission and they are worth their weight in gold if they're good negotiators. So it's not necessarily a lose. It's just something that you need to consider and consider which way you're going. Now, if you're buying from family or buying a more rural area, those are possibilities as well that you need to consider. But the steps to buy a home are all going to be the same. You really need to get pre-approved first. You really need to do that before you start looking for a home. Don't fall in love with a home right away. Fall in love with your future. What does your future look like? Understand your cash flow. Understand what it is that you can do with your cash flow and don't vary from that. Now, going into the next slide where we're going to talk a little bit about negotiations, just make sure that when you jump into the negotiation side right here, you need to think about this kind of like Jason did. Okay. Jason, when he came and he started looking at negotiations, the home is not yours until you get the keys. So you need to negotiate as if this was a business transaction until you get the keys. Be strategic, look at it far beyond price, avoid emotional reactions or signs of desperation, look for win-wins. One-sided negotiations will shut down, especially in this market. Define ahead of time what you're going to be doing with deal breakers. Understand your closing costs. Understand the closing date. Understand what you're going to have to put as what's called earnest money. Make sure that you have that set up and that you know exactly what it is you're going to do. Understand what you're going to be doing for inspections these days. If it's a very competitive bid, you may not necessarily be able to do a formal inspection, but that doesn't mean you want to accept the home and the condition it's in if it's going to cost you all sorts of money. So having some form of an inspection is a good idea. Making sure that you get a warranty, other things like that. Understand what it is that you're buying. If you're buying in a rural area, you need to make sure that the well and the septic are working. You know, the big things is making sure that the condition is acceptable enough and that the key structural aesthetics of the home, the structure is in great shape. And the aesthetics, that would be valuable too. Understand that the appraisal plays a huge role in your negotiations. And we get into that quite a bit when we're talking in our 5 steps to win. Now, in Jason's case, he thought that his only option was to accept what the seller had. And we helped him discover another path. We helped him understand the moves, less disruptions, less stress, understanding what he was going into. That's part of what we do in the meeting. And then he was working with a great agent. We coupled it in with him, and we helped him understand that this agent was going to do a great job negotiating on his behalf. And it worked well. Now, we've had people who do for sale by owners too, and they don't have an agent represent them. We have some white sheets that we give people so that they know how to understand the negotiations because they're going to have to negotiate for themselves. And these are all big pieces because good decisions come from preparation, not from pressure. And we want to make sure that you have this set up the way that you need to. Now, getting the keys is pretty cool. And JT and Jarrett and Vicky all got the keys. After months of work, they were able to get the keys and walk through that front door of their first home. Not because everything was perfect, but because they stayed committed to the process. The goal is never the mortgage. Yes, you need the mortgage, The goal is for the life that comes after once you get the keys. Now, once you've negotiated the purchase, you've worked your way through the process of the loan, and now you get into a place where you're getting ready to close. The title company is going to play a huge role. They're going to make sure that the seller is a seller record, that the seller record has a right to sell, and that they're going to sell and transfer legally the home to you. You want to make sure that on closing day that you've gotten all the funds over there, that you've got your wire them over there, that you have a photo ID. Most of the time these days it's called a hybrid closing where you electronically sign most of the documents from home and then you just go in to sign the deed of trust and the deed itself. That's usually it. And those require wet signatures. And so that means you have to go in and put some ink on them. The closing package will come from the title company and literally it'll be a clean transfer that entire day. But the only way it works after months of work is if you stay committed to the path, to the strategy, because the goal is not the mortgage. The goal is the life that comes afterwards. Now, I've got plenty of things that I'm going to be offering you. We've got plenty of resources. You can scan this QR code right here. This will take you to my website where you can actually download some free information right here. You don't have to remember everything. You created these resources on purpose so that you can access them and so you can download them. If you need more, if you're going to do some negotiating on for sale by owners or you're going to do it by yourself, we've got the resources to help you out with that as well. Now, the real big piece with this is managing after you get the keys. This is where the memories are made. This is where it's a really good idea to start putting together a little dossier of things that you need, a list of plumbers, electricians, maybe not the cheapest ones because you want to make sure it's done right, but you want to make sure that you have what you need in order to get that done. YouTube can go a long ways when it comes to working with repairs on the home, but you got to remember that getting the keys is not the finish line. That is not the finish line. That's the starting line. That's where your memories are starting to be made. That's where your family gatherings are starting. That's where the stability comes. That's where you start building wealth. And it all starts by understanding your cash flow. It's extremely important to understand. Now you can emotionally move into the house. Now you can emotionally make something out of this. Now, here's some of the questions that we definitely still need to answer on this is as far as a market and what's happening in the market. This is really big information. Right here, interest rates are all over the place these days. The situation in the Mideast has caused them to kind of go crazy. They're starting to stabilize again now that we have some form of an agreement on the table. So that's really good. The projection is long term that they're going to get better. Now, the rates don't have to be perfect to be a smart decision. And the reason why I bring that up is because 5 years ago, the rates were perfect, but there was a lot of competition. A lot of people backed out because of the competition. And think about the equity that they lost because they waited 5 years. That same thing is going to happen again because rates are high, keeping a lot of people out of the market. That's a big deal, which means that you have the opportunity. Yes, there's still competition. Yes, you may still have to pay a fair price for that home. But guess what? When the rates go down, the estimate is between 7 and 10 million additional buyers come into the market for every 1 percentage point that interest rate drops. So what that means is you're going to have 7 to 10 million additional competitors that are going to be looking at the same homes you are. And that's a lot of competition. So while inventory is where it is, it's not the perfect time, but it doesn't have to be perfect to be smart. Okay, so getting that done. So this one is the next thing that is realtor or without a realtor. We can talk about that real quick. There was a situation several years back where the lawsuit came out where, in essence, you are responsible as a buyer for your own agent. Now, having said that, a really good agent is worth every single penny because they are your negotiators. That is what they bring to the table. You can find the house, realtor.com, Zillow, you can find the house. But negotiating, they help remove the emotion from the negotiation and they can actually help you win if you have the right one. Now, you do have to pay for them. That is a big deal. You are responsible for that. But having said that, the market still has the seller covering the cost for the realtor. So you may want to consider hiring a realtor and hiring a good one because what they bring to the table is rock star negotiations. Now, if you're doing a for sale by owner or something like that and you're having a hard time trying to figure it out, I certainly can give you some white pages. We actually have a fantastic website that we found where you can do contracts without having to get that set up. So if you want to do that, that's great. But just remember, you're riding solo and you're going to have to do the negotiations for yourself. Now, should I wait? I've met families who waited. I've met families who also focused on being prepared. The families who decided to get prepared, they had options. The ones who decided to wait, they lost out on equity. See, the rates don't have to be perfect to be smart. And so now's the time to get prepared and to get yourself set up. So because of that, I actually have plenty of places where you can join me in the conversation. These are some places. In fact, I'm recording this one tonight intentionally to go onto this YouTube channel. And it's designed to make sure that we set people up with clarity, with no pressure and no guessing and no risk. We just want to make sure that you know how to get there and what you need to do. Several first-time home buyer ones are going to be on there. There's all sorts of other things that are going to be on my YouTube channel. I certainly hope you will join in the process, which really that leads me to why I do what I do. I choose to build my relationships and build my business through relationships. And that's why I do this, because I don't really want to purchase cold leads. I don't want to pay for referrals. I want to serve people. I want to help them get where they need to go by introducing them to how they can succeed at an extremely high level. And I want to be able to care about these people. I don't want it to be a cold relationship. I want to care about it. I want them to know that I'm trying to earn trust and I work by referral. So if you're looking to build something like that, you know, I devote myself to my clients before, during, and after each transaction. You'll see that. And then this is an example of how you've heard some stories tonight of how I've done it. And literally, we do it to make sure that they have the success necessary to get where they want to go. Now, bringing it full circle, remember Jarrett, remember Vicky, remember Roy, JT, none of them, not a single one of them started with perfect circumstances. Not a single one of them started with perfect circumstances. They started with a decision that they needed a plan and that they needed to follow the plan. Now, we also heard about Vega. Vega had a plan, but he didn't follow it. And he's still wishing he could buy a house. So the message tonight is this is not about mortgages. This is about possibilities. This is about hope, and hope is powerful. But hope with a plan can change your life. So if you'd like to have some more clarity about this, I'd be honored to walk you through this privately, even if the answer is not yet. And I want to make sure that you know exactly what it takes and what comes next. And that's part of our 5 steps to win. I certainly hope you'll join us with that. All right, I am wrapped up for tonight. I am so thankful that you were able to come out and join me. If you have any additional questions, I'm certainly going to stick around and answer any if you have any. Otherwise, I hope you have a great evening. Any final questions? All right. Have a great evening.